You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. Welcome back to Volatility Views. Hopefully you guys can hear me out there. It's a little bit choppy here on my end. How about this, Mr. Rock Lobster? Can you hear me? Give me a test one. Give me a 1, 2.
It's much better now. Much better.
I don't know.
It was really spotty there, brother.
I don't know what was going on there with the music. Got crazy people running the show in Chicago, but they're doing good. All right. Welcome here to Volatility Views, the premier program for volatility traders. Got a little bit of vol on the old screen today, so good day to be talking. Good day to be gathering together here, talking some volatility. If I sound a little bit different, it's because I'm still here in the magical, lovely JW Marriott, who, when they heard I was doing a radio show, gladly agreed to extend my stay here at the hotel so I could do the show. Visit the JW Marriott here in Washington, D.C. They're very nice people. Tell them we sent you here at the Options Insider. They'll love it. But, it's interesting stuff here. I'm still here at the STA, Security Traders Association Conference, talking deep in the weeds, hardcore stuff about market structure. Pretty wonky stuff, but you'll hear some cool interviews hitting the network. Maybe even hearing some of those already. A whole slew of those come in, as well as the shows we've been doing live from down here. We're beaming through the magic of technology back to Chicago, and then out again all the way to the guy you just heard, the Rock Lobster himself, Mr. Andrew Gimenazzi. Mr. G, isn't that amazing technology? I'm here in D.C., you're in Maine, we're routing through Chicago, and the whole world's happy, well, for the most part, and that's kind of crazy, huh?
You know what? Are we on the same coast? One of these days you got to come up and visit, but you got to bring your wife. You got to bring your wife with you. You have to bring
same time zone. Same
yes.
time zone. It's very rare. Usually when I go to your time zone, though, I go to the southern reaches. I'm here in the nation's capital. I haven't been down here in a while. Quite a lot has changed since my last time here, which was well pre 9/11. The city is a lot different.
Well, I'll bet you there's all. Yeah, I haven't been to Washington since. Oh my gosh, like forever ago, 1990.
Yeah, I was not that far different from you, and it's an armed camp now, a little bit different than it was back then, but also be a heck of a lot cleaner. They really cleaned up the city, literally and figuratively. I remember coming here when I was a kid, and this place was, I think, to put it charitably, was not clean. And so I was talking to some people at the conference about that, and they've had similar experiences. They were marking the same thing. Yeah, Washington has cleaned up its act, literally and figuratively, in many ways here. Speaking of cleaning up our act, let's get to it because there's stuff to pop off here. Let's get into our volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody. Welcome to the Vol Review, the portion of the show where, guess what, we review some volatility. And, we got some vol on the screen today. You know, it's funny. I was listening to some political talk this morning here in some of the sessions, and I was kind of keeping my eye on the markets. And it seemed like we had a relatively tranquil start to the day, not a lot really popping off. VIX cash was in, shy of the 15 handle, well into the 14 handle at the time. VVIX was elevated, but still relatively calm, all things considered. And then we get this non-farms number, kind of just rips the cover off the ball here. What were the actual? I just had it up and I just lost it on myself. But the actual numbers out there were kind of staggering once I pull them up and do a little bit of there we go. There, it's a lot better. We saw numbers coming in this morning. They added 134,000 in the non-farm payrolls, less than the 185,000 forecast by economists. So that's not a good thing. But also we saw the unemployment rate drop to 3.7%. This is for September. That's the lowest level since 1969. That's just stunning. I don't know, Mr. Rocklops. I don't know if you ever studied the dismal science. I had the unfortunate. I was unfortunate enough to do so. When I did so in the mid or so to late 90s, they would teach us. They would beat into our head. There were certain inalienable truths in the world of economics. One was that the Phillips curve made sense, that there was this great relationship between unemployment and inflation. That got blown out of the water the day I left school. And this other thing was that there was this thing, transitional unemployment. There was this level that unemployment could never really fall below. It was somewhere around 5.5%, depending on who you talk to, but somewhere in that level. There were always people looking for work, always people who didn't want to work, who were not in jobs. So there was always this transitional level of around 5. It was like it was structural unemployment. And here we are, 3.7% in September. So I think that's why they call it the dismal science, sir, because nothing they say holds true for very long. Are you on board with that?
You know what? I did take economics in college, to be honest. I did, after physics.
What did they call it? What did they call it in 1953 when you studied economics, sir?
Yeah, they called it the dismal science, too. It's always, what's funny is this is what you do when you're like a lazy partier at college. You went through 2 years of physics. You've taken all your upper division math you need to take. You're like, man, now physics gets really hard. It's quantum mechanics. So I'll just take economics because, man, it's a lot easier after physics. So, and then, and then I stumbled onto a trading floor after college, luckily. And thankfully, you just needed just basic math back then, just, quarters and nickels, and you were good. Quarters and sixteenths, I should say.
Yeah, you needed to know your fractions, and that was a good starting point there. Yes. You could do fractions in your head really quickly. You could trade many, many millions of dollars, which was always an interesting. Yeah, we actually used to race doing fraction races, which seems madness now, but that was a sincere skill. You had to be the king of like 5th grade math, and then you could crush it. Of course, you had to do a lot of complex level changes in your head, too. So there was more to it than that. But at its core, that's what it was. All right. Since we're having fun slamming things, obviously, we're moving through the VIX zones right now, Mr. Rock Lobster. What VIX zone are we in? And are you kind of as surprised as a lot of people by today's abrupt turning of the worm in volatility, sir?
Well, I mean, actually, we opened this morning down a little. Like VIX was down; it was $14.
Yeah, it was in the 14 handle.
And so I'm like, okay. And then everybody got sad again. I'm not, I have so of course, my volatility rules. I have a lot of volatility rules. I got a lot of rules. We are in VIX. We are in zone 2. And what I say is, your vol has to be sustained. So. And I think there's some uncertainty. So the rate thing is uncertainty. So that's enough to that can get VIX going. We had a huge contango early in the week, like $2.50 or something till October. It was massive. So the future guys were not selling futures, which was a little odd. Of course, that makes you position certain ways. And then, now this Supreme Court thing. Now everybody says, what does the Supreme Court have to do with, economics? But there's politics and this and that and whatever side on the fence you are. It's still kind of a big unknown. It'll be a big unknown for the elections. So what the market likes is knowns. So all of a sudden you have one unknown, and you have two unknowns, and now it looks like a Saturday vote, and then some senators are on the fence. And I think once a couple of senators it looks like they got on the fence and nobody knows, VIX went up again. So I'm not sure what the reason was besides that. 'Cause I'm looking at news, I'm just not seeing anything. So my sense is, I think, right, because VIX is going up way up more than the market's going down. I'm looking at like a little ARB I have on. I'm like, oh, wow, my long vol trades are doing much better than the short index put trades. I'm like, oh, my gosh, look at that go. Look at that go. So go, vol, go, so I can close those things. But the market's not really going down a ton, right? So to me, that means it's definitely down a little bit, but it's not even down 1%. So like what's making it happen? What's generating that? So I look at that and I go, it's not a lot. So it's probably not like economic related. It's more like, everybody's kind of freaked out. The weekend's coming. They're definitely jacking the weekend back into everything. And I was funny at the beginning of the week. I'm like, they keep taking the vol down. I'm not going to buy any time spreads. And all my clients did it anyway. And they're glad they didn't listen to me because I chickened out. I'm like, this is just going to be big nothing. But ultimately, when you've got that much future premium, somebody doesn't want to sell them, and let's just say you have to give it some respect. So anyway, for the most part, we did, plenty of long call spreads and VIX and stuff like that. But I'm surprised just by how much vol's gone up. But the markets, it's very easy for the electronic market to get unhinged quickly, and that's what we got. So, and at least for right now, I mean, we're almost trading 30 VXX. So when we traded 27 this morning, you could buy strangles for nothing in VXX. So all that, I mean, the vol looks like it's going to move. It doesn't look like it's going to stop moving, and that's what we've got. And it doesn't appear that it's going to stop anytime soon. So, or the vote happens this weekend, and maybe, we open down to 14 VIX again on Monday, which is certainly possible. So, I think we had a pretty, again, too, and I want a hot non-farm payroll number, which is again more bullish rates and bad for bonds. So, all of these things are sort of conspiring together to all of these things that are let's say they're enough to get VIX up but not the market down, because realistically there's like rate uncertainty, but the Fed said they're going to raise rates. So I think the economic news is good, but the algos don't like rising rates, and that's kind of what we got.
So by my calculations, we're at a VIX zone of 64. Is that correct?
Yeah. Well, we're quite backward, by the way.
Yeah, I was going to point that out. This morning when I first checked and we were first looking at this, not that long ago, we were, as you mentioned, like in a 14 handle on the cash. The futures had a decent premium. They were about half to 3/4 of a handle premium in the 1 month, and about a point or so or close to it in the 2 months out. And then it just flipped. We're super backward now. There's like a 3/4 of a handle premium to the cash right now to the front month. So completely the other way, and about a little bit more than that for 2 months out. So yeah, we're super backward. All of which I think I factored all that into my calculation of my VIX zone 64, sir.
Yeah, it's like cash is almost 17, so that's not nothing. So that to me just is. It is showing there's more vol than market down, and ultimately we don't know where that ends. Now, also don't forget, and when I've done this before, right, where very backward is still the market is looking for a pretty good sized move, just a 1% move. I mean, we were trading 29.30, I think, earlier this week. So that is also a 1% move up. So the market is starting to build some movement back in. Like, okay, well, if nothing really happens, or if we if something happens we expect this weekend, maybe we fly up 30 or 40 handles in SPX. So the market is pricing realized vol with this curve. That's what you've got to look at. So they're not, the more we move down, the more we can snap back up. And as we keep getting deeper, you will see that rubber band start to stretch a little more. So I think this is, at least for me, just actually buying vol puts against my vol longs because I want to actually add gamma right now. I don't want to subtract gamma in the vol product. So I know that sounds counterintuitive, but that's what I'm going to do, and I'm sticking with it.
That's my call, and I'm sticking to it here. Yeah, this has been kind of a fascinating stuff to watch going on here as we're talking. Like I mentioned, VIX cash threatening, actually hitting the 17 handle. Let's see, how high did we get intraday here? We are at 16 3/4. 1705 was the high we just hit a little bit ago. So all sorts of craziness here on the tape. Our buddy Ophir chiming in. He's saying VIX is ripping. Yes, I'm with you. I see it. He wanted to make sure we saw it. We see it, Ophir. Thank you. But yes, VIX is a technical term, ripping. VVIX, it was at a paltry 90 something. Not too long ago this morning, and all of a sudden it's way elevated, way over the 100 handle now, 109, approximately 20 handles higher than it was this time a week ago. So put all that in your pipe and smoke it. Things are looking juicy. We already hit on the old curve out here in VIX futures land. Let's get on to the mothership then, the options. It was, I think to put it mildly, a very active week. We had the ADV right now is still hovering around that level, the 450 under 500,000 level. We're seeing Monday with about 289. The tapes are pretty light. Tuesday, 281,000. Wednesday starting to tick up 485. And Thursday, of course, was the big day, the banger, 1.3, almost 1.4 million contracts on the tape. About a million of that calls and 389,000 of that on the put side. Today, as of earlier, let's see what it is now. Actually today we're lighting it up again now because we had it written earlier today. It was only like 100,000 contracts on the tape. It seemed light. Then of course non-farms change everything. We're at 689,000 as of showtime right now, listeners. So again, well north of the ADV, which is hovering at about 475 right now. So we're lighting things up again. Actually, we saw on Thursday our buddy, everyone's chiming into us on the show here, our buddy the Flow Master chiming in saying they have all the data obviously over there. And if I could find his exact tweet, I will put it up here for you listeners. But he was saying, here it is, that on Thursday it was, come back to me. Where did you go? Hold on. My thing is all sorts all over the place today. There we go. That's what I get for running the whole thing on a laptop in the portable studio here. Yeah, option volume coming in on Thursday in VIX land for the first 2 hours of the day was the highest level since June. 500,000 contracts hitting the tape in just the first 2 hours. We're close to that today here as well. Calls at the time were leading puts 5-2. It is pretty outsized on the call. Not quite as bad today. It's about 3-1 calls over puts out here, but still fascinating stuff out here in the Bitcoin. In the VIX. We'll get the Bitcoin in a little bit. Everyone's got vol going on the brain these days. We'll get the Bitcoin in a bit, but it's VIX options was lighting up the tape. Mr. Rock Lobster, I will allow you to play the game. If you had a guess right now, the number one open position, we're looking at the hot VIX strikes. So if you had a guess number one on our top 10 for this week, this is total opens, not just this week's activity, all the open positions in VIX land. If you took them all together, what do you think is number one right now, sir?
Oh, and all open VIX positions?
All of VIX land, month and strike, sir. Go.
Oh, damn. Because I don't look at the show notes for this stuff. I try to sound smart.
I can rely on your integrities. That's why I know if I was a meatball, he would be like, "Oh, let me look at the show notes." Oh,
all right. I'm gonna say the largest open interest is the November 14. No, the November 20 calls in VIX.
November 14, that would be something.
14 puts. I was thinking
14 calls. There'd be some meaty calls there, sir. That's a happy camper today if that was the case. Actually, when you're saying puts, you're on the right side of the fence at least. It's the OC13s. It's our old friend with that kind of risk reversal.
I was about to. That was on my because I knew that was. I know. Well, anyway, we've got some October positions, but I know that was next.
See, I can even flummox the author of the volatility newsletter, sir. Yeah, the
Yes.
OCK13 puts number one, nearly 500,000 contracts open. That could change given today's volume. What we're coming into tomorrow, we'll see how these OI numbers how they shape up. But we got a lot of contracts hitting the tape today. But as of this morning, coming into today, it was the OCK13 puts with nearly 500,000, about 450,000 contracts open. They're making them far and away the number one. Again, part of that big kind of vertical versus puts trade. Then we got number two here. We got the NOVE 20s. Again, part of that vertical is the NOVE 2026, remember, listeners, versus the OCK13 puts. And the NOVE 20s, number two, no surprise, 340,000 contracts open there. Number three, surprise, NOVE 26s with 250,000. There's a little bit of a ratio on there. Number four, we got OCK25s, 220,000 contracts. Number six, OCK21. So nice little OCK call strip there. Some of those people, if they're loading up on upside, looking a little happy today. OCK21s with 210,000 contracts. Number seven, the OCK12 puts. So a nice little couple of OCK puts going on here. That was part, I think, in some of the latter flavors of that risk reversal he was putting on there. He actually had some puts with that as well, the 12. So he had a little bit of a put spread. So that could probably, I think that's why the 12 puts are lighting up there. And then we've got number eight, the Feb 37 halves. 171,000. I think we'll get to a little bit why those are on the tape in a little bit. Number nine, the NOVE 13s, which is close to where the Rock Lobster was playing, with 169,000 contracts there. And actually, I'm off. That's number eight. Number nine is the OCK 17s with OCK 18s, with 156,000. And number 10 on our top 10 here, the DEES 17 calls, 149,000 contracts. Total outstanding, let's see, about 8.6 million contracts, about 6.3 or so on the 6.3 on the calls, and about 2.3 million on the puts. Before we get to some of the activity, was lighting up our tape. Mr. Rock Lobster, any VIX mothership options activity coming on your radar this week, catching your eye, sir?
Those actually puts. That's why I said the 14 puts. Just looking like they're positioning like election, post-election type puts. So not a particular strike, what I'll say is not a strike per se, but more of like a tone. And I think they were looking at put buying early this week, and I'm not, and this could be one of those where there was a lot of put buying in VIX. And it might have been they were buying futures to go with it too, because they were, they could leverage that trade quite a bit. You buy your junk puts and then you buy a bunch of futures, because all those futures were very expensive. Now everything is kind of going backwards. Maybe there's a little bit of selling going on, but definitely looking like they don't think the vol is going to stay here. When you're backward in the October 17 now, the OCK ordinary is down there, so it looks like. They're looking for lower vol by next week, but as far as that goes, we saw a lot of puts. A lot of that stuff was across the tape, like puts in stock. It kept coming across. So, and right now they look right because the puts aren't going anywhere, and VIX is up $4, so or $5 or $6. So they were right.
Yeah, go figure. They knew what was going on. Coming in before the big number today. We had the big trade on the tape was this 50,000 lot of this OCK. It looks like an upside rolling from OCK to NOVE, the 47 half calls. It went up 25,000 times, so net 50,000. Looks like they were selling out the OCK, rolling them to NOVE, doing the whole thing for 9 cents, keeping that upside love alive. Maybe in hindsight, maybe they kind of wish they kept the OCK on for this move today. NOVE's not gonna look bad in NOVE either, but obviously a little bit more gamma bang for your buck in the OCK than in the NOVE. So maybe they were a little bit aggressive in their timing there, but still the upside looking good. Then of course, once it all broke loose out there, we saw a lot more action lighting up on the tape today. Of course, the big day this week outside of today going in was actually Thursday. We saw a lot of upside call action and verticals there. The OCK 1721. Looks like a bit of a ratio vertical going up there, but for size, we saw, was it 30,000 blocks of lots of the 21s, followed by 20,000, followed by 20,000 more of the 21 calls. So that spread went up size many times over there on Thursday. On Wednesday, getting to what I alluded to earlier, the big trade was a roll. Remember, we had said for a while in our outstanding top 10, the DEES 47 halves was kind of like the outlier out there, because someone had some love for these DEES 47 halves, and it looks like they decided to take that love and extend it out to Feb because we saw the D's 47.5, Feb 37.5, getting a little bit less optimistic perhaps with their strike selection. Rolling those out to Feb 42,000 times. Looks like they did it for 24 cents. How you like that, Mr. Rock Lobster? Rolling D's 47.5 out to Feb 37.5, so 10 handles closer to the fire, to the good, and doing that for 23 cents. How you like that one?
I don't think that's too bad.
I don't think that's too bad either. That one kind of caught my eye as being not a bad do, as they used to say out there. If I had to choose, I definitely want the 37.5 strike and a little bit more time to play. I'm down with all of that. So maybe a little bit not a bad. I wasn't hugely on board with the D's 47.5s to begin with. So any move off that month and strike, I think is a good call. Feb, always a weird month anyway for VIX. That's when we see crazy action a lot out there, like people coming in and loading up on the 70 calls and all sorts of weird stuff. I don't know why Feb is that time, but maybe now, of course, the anniversary of this February, we might see some crazy stuff this February as well. Market has a weird memory in that sense, and of course, a lot of trades hitting the tape today as we're talking that we don't even have time to parse going up out here. But a lot of interesting stuff in VIX land. VIX kind of waking up here at the end of the week. It seemed like it was going to be a relatively sleepy week. VIX was coming up, getting some juice, but wasn't really exploding. And then all of a sudden, bam, Mr. Rock Lobster just off to the races. And you might think, by the way, if all this action, of course, these numbers don't reflect today, so it might have changed a little bit today. But you might think, Mr. Rock Lobster, with all this movement in VIX land, that people would be searching for VIX, right? We like to do a little Google Foo search analytics every now and then to see what, let's go outside the financial realm. Let's see what the broad Google world is telling us when it comes to finance. That's how we found such nuggets, Mr. Rock Lobster, that like you are the number one searcher for options in the state of Maine, and you have single-handedly made Maine the options per capita mecca of the U.S. Who knew? So we find little nuggets like that whenever we do this. And this time we thought we'd go just purely specific. Let's just search for VIX and see what people are looking for. Because VIX is one of those cool things where it's not really other things that are called VIX. So you don't really get a lot of other searches for VIX. Maybe there's Victor, Indigo, Xavier team. I don't know, something weird. But not a lot of things that use the acronym VIX. So you're relatively safe there. So we did that analysis back to 2004. Obviously, you can probably guess what pinned the needle at 100 on the charts, the top of the list, Mr. Rock Lobster. I'll give you a hint. It was very recent. It was this year.
The Volpocalypse.
Yes, Volpocalypse. That is, they measure these charts from 0 to 100, 100 being peak interest, and that buried the needle. That's higher than anything else, higher than 2008 and anything else on this chart. As when we ran this, which was earlier, about a week ago, maybe a little less than a week ago now, so obviously things have changed a little bit. But when we ran it, Mr. Rock Lobster, and again, I can rely on you not to look at the notes, where do you think the current level of VIX interest was shaping up as compared to that VIX Ocalypse? What level in that 0 to 100 do you think we were at?
I'm going to say 23% of that.
Wow, it's actually not a bad guess. 18%. I'm actually impressed. That's pretty close. I thought you were going to guess somewhere around 40 to 50, which would have been a relatively sane guess as well. I probably would have come somewhere in that 30 to 40 range. And but yeah, 18%, so fairly anemic. I'm going to have to go out on a limb and say today's action may change that. We'll have to do this. We'll have to run this analytic again, maybe next show, and see how it changed. But yeah, so interest in VIX is, I think to call it anemic is charitable. That might change given this week's price action. Let's move on to our friend, Mr. Rock Lobster, our friend VXX. Have you heard of this? Are you familiar with this?
A little bit.
Our old friend, Mr. VXX. Coming into the show, it was looking a little bit robust, but not quite off what it was last week. It was about 26.65 coming into showtime, and this week, spoiler alert, a little bit higher than that. It is at right now. Where are we right now? We're just off. We were threatening the 30 handle, back off that now. We're at 29.60, up 1.8 handles, so quite a bit higher, about 3 handles north of where we were this time last week. A pretty active week out there as well. ADV still hovering in that 200 some odd thousand range. Monday was the more active day, 290,000 contracts on the tape. Tuesday kind of weak, $1.27. Wednesday 231. Thursday, of course, 492. And today it wasn't looking too good until a little bit ago. Let's see what level we are at now. Yeah, 321,000 on the tape. The ADV 228,000, so about 100,000. Beyond that, it looks like no signs of that slowing down anytime soon, Mr. Rock Lobster. So yeah, VXX on the rampage. I'm sure that is not music to the ears of many of our listeners. I don't know if you know this, Mr. Rock Lobster, seemed to have a little bit of a short vol bias. Did you know that?
It does have a little room. That's the thing is, everybody does, which is fine because that's what it does most of the time, except the times that it doesn't, you know? So I think there's always a little bit of gnashing of teeth on these vol moves. So I have all kinds of little isms, and my normal ism is you don't dead fade the first pop in volatility. Because I think in general you want to see if there's some fire under that smoke. So I always try to counsel people on that. Just being careful of fading that first vol move. And like VXX, it's so tempting to fade that first move. You can't help it. It's almost like it's a little Pavlovian.
So you're saying I shouldn't have lifted the offer on 100,000 Jan 10 puts for a penny right now? I should not have done that. I should cancel that. Oh wait, too late. I'm filled. Oh no.
I think everybody's going to get filled.
So yeah, speaking of, but that's a good ism, I think, to guide your trading by. Speaking of VXX, sir, we know the top 10 positions. You know, the top 3 at least are the 10 puts, the 15 puts, and the 5 puts all in Jan. Number 4 is the first non-Jan position out there, Mr. Rocker. What would you think is the biggest open non-Jan position in VXX right now, sir?
The Jan 10 puts.
No, a non-Jan. So Jan 10 is number 1, Jan 15 puts number 2,
sorry.
Jan 5 puts number 3. Number 4 is a non-Jan option position. What do you think?
Sorry about that. I'm going to say a December ordinary 25 put.
Interesting. Not a bad call, and but no. Not even close. It is the NOVE 45 calls. 65,000. These went up not too long ago. I recall
not
this
even
trade.
close. Yeah. Not even close.
Followed by the Jan 33 calls, 53,000. All calls. Followed by the NOVE 60s, 42,000. I think those are 45, 60 verticals I recall went up. Then the Jan 50s, 40,000 of those. Then you got next puts on the list. You got to go all the way down to the OC 24 puts, 39,000 of those. And then the Jan 18 puts, 34,000. And number 10, the OC 50 calls. So there is some call love, some call action. Obviously, could be some active overriding going on up there as well in VXX land. I'm sure there is. But still, interesting stuff. Everyone who writes into us all the time saying, oh, there's no interest. Why would I ever touch a VXX call? You are alone in that position because there's a lot of, or in that interest, because even right now in the top 10, about half of them are call positions, Mr. Rocklops. I know you love yourself a good VXX upside call. You load up on them all the time, right? That's your deal. That's what you do in the Vol newsletter. You say buy VXX calls, rinse and repeat.
Well, you can, like right now, I think VXX calls and call spreads and stuff like that are, this is the best time to buy them. I know everybody's like, because Vol's going up. I think you create strangles and all kinds of fun positions with them, but very few things will perform as well as a VXX call spread right now, just because, this VXX is moving like crazy and the volatility is higher, but it's still nowhere near what VXX can do if they decide to blow to 20. So I think the potential is there for very good trades. Of course, Vol newsletter followers kind of already got those trades this morning, and everybody be making a lot of money by now. So the potential is there. It's just, VXX is a better vehicle to trade once it starts moving. When it's not moving, I think everybody tries to pile on the contango train, and they get, and like anything, you get what you get, I guess.
You do get what you get, and in the case of VXX, it's often predictably crappy. Days like today, it's sometimes predictably weird as well. So get to all that fun stuff. Since we're talking VXX, let's get to some of you folks. I like to, whenever I'm in the mobile studio, open it up to the folks out there with their questions as well. And we got a fun question for you guys running right now as well that you guys are playing in. So let's get to it with a little bit of our volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
Man, the Chicago studio crew on the ball. Look at that music coming in right at the cut. That's pro level stuff going on right there. See, I can leave the studio in good hands. I like that. Makes me happy. All right, here we go. Let's roll on to what's lighting up our tape this week. We actually had good timing to ask you guys a fun little flash poll right before the show. Spoiler alert: we knew this was coming in VIX. That's why we asked this. We asked you guys. Let's see if I can pull it up myself. Here we go. All right, we asked you guys just this morning. Pretty simple, straightforward, kind of little flash poll. We like to take the pulse of you folks out there. You guys can play along at Options on Twitter. You got to move quick on this one. It's a flash poll. It's only going to be around for another few hours or so. And we asked you quite simply, what is your weapon of choice when trading volatility? We gave you 4 or 3 kind of choices that are in the standard index vol realm, but we like to leave things open for you guys to send in your alternatives. We gave you 3 choices: VIX VXX, or the old straightforward SPY/SPX options route. Maybe you want a delta hedge straddle. You want to go straight up some premium vol in there. Mr. Rocklash, I left it open with an other. I wanted to see how long before someone sent us in SVXY and UVXY. How long do you think it took, sir, to get that response? That's my first question for you.
A day.
No, this poll's only been up for like an hour and a half, and it took about 8 minutes, maybe 5 minutes for the first guy wrote in. That's VXY, and I was like, wow, that didn't take long at all. I'll give him credit for being the first one. That was Martin Ryan. He also added TVIX, our old friend TVIX. It's kind of funny now. I've often joked about TVIX. You talk about predictably crappy. We saw TVIX just be crappy. We saw TVIX just completely implode. And yet now, thanks to VIXocalypse, it's like the last of the Mohegans. So people are trading it. It's still
alive.
It's still alive. It still lives. People have a short memory, I guess, in the vol space. I think that guy took some umbrage to my comments about TVIX. He said there's nothing little about either TVIX nor UVSY. Both have good liquidity, tight spreads, and good trading price action. The XIV, the IV imploded, but the aforementioned are doing well as effective alternatives to options. Well, he took umbrage. He's a defender of TVIX. Well, there you go, sir. Some people out there loving TVIX. We got just a lot of Ryans. Ryan just chiming in saying he likes the SQQQ. You like that one, Mr. Rock Lobster?
Which one?
SQQQ.
Never heard of it.
Yeah, that's not on my. He says it's an ETF he likes to sling for NASDAQ vol. I'm going to pull it up right now. This is the ProShares Ultra Pro Short Qs. So this is an inverse Q one, I guess. I don't sling this one. I haven't really touched it. So that's why I like to put it out to people. Sometimes they have weird choices. Not strictly a vol play, but we'll take it. We'll take your suggestion out there. You stumped me in the Rock Lobster, so well done there. And then someone else writing. I like people who write in to say VXX. That's part of the poll. You could choose it. You don't need to write in, but we'll take it. Andrew. I don't know Andrew out there. So maybe it's you, Mr. Rock Lobster, saying, I guess he wanted to put a double vote in. What do you think is winning right now, Mr. Rock Lobster? VIX, VXX, or the old direct SPY/SPX method?
You know what? I think VXX. There's a lot of VXX love out there. That's how I'm going to go. That's going to be my guess. I'm going with that.
For a while there, it was pretty even, like a third for each. And then we got now VIX, I think, in the recent price action has taken the lead. 39% for VIX, 30% for VXX, 27% for S&P direct action, and then 4% for the other, including everyone who's taken umbrage with me for having the temerity to slam TVIX. How dare you malign such a fantastic product known as TVIX? What could possibly be wrong with this? Does no one remember a couple of years ago? Am I crazy, Mr. Rock? Did I imagine that whole scenario with TVIX? Did it not happen? Was it all in a fever dream of mine?
You mean the fact that it got overbought, they didn't create more units, and the price tanked like a jillion, like 70%?
Yeah, the thing completely imploded. I think people think I mean when I say imploded that by this February. No. You got to go back farther, listeners. You got to pay attention to the vol history. Do a little back search on TVIX, and you'll find some good stuff. I own this. Maybe I should think not twice about that.
Well, you know, it's another thing about these vehicles and how they were managed at one point, and you have to be, you know, these vol products, like when we say VXX is predictably crappy, there's a reason why, because it trades in a, you know, it trades in a not a methodical way, but you know, well, that may be the right word, but there's a method to how that product works, and they've kept the product consistent over the years. Now, the fact that they changed the ratio on UVXY and SVXY I think was pretty much like robbery. But other than that, VXX, they haven't messed with it yet, and mostly that's because it buys the futures. So generally buying stuff is a lot less dangerous than selling stuff. So.
Yes, I'm getting caught up in reminding people about their volatility. I can do that after the show. I don't need to respond to all the umbrage right now. I'm like, how dare you? No, I'm just kidding. All right, let's move on to some questions. We got other ones out here. Everyone's chiming in with their thoughts. Alacor, I like this. It sounds like a sci-fi handle. Alacor. I am Alacor. I like that. If you were at a sci-fi book, Mr. Rocklaus, I give you permission to use this guy's name. All right. He says, like the show. Well, he's a man with good taste. I like it. He goes on to write, I tried my hand at the crystal ball. Not good. yeah, it's hard, isn't it? Just look at this week's numbers, where we're all, the closest was Bill Valentine, and he was like 4 handles off. So yeah, none of us saw this worm turn into this degree on today. I was fading it probably a little bit too aggressively. Others were buying it. Bill was buying it. He was playing Russell, but he obviously wasn't buying it enough. He was at a 13, I think, and that was the closest we were. So about 4 handles off where we are now. So yeah, it's a long story short. It's the hardest part of the show. That's why it's fun. He says here, he goes on to say, I heard you talk about straddle runs in the SPX. Are there any products that package hedges? Excuse me, let me try that again. Are there any products that package hedge? I think it means hedged ATM straddles as a product. Maybe they offer it to Delta Hedge as well. We have talked about before. In fact, you put that in the poll about, you know, using just direct SPX or SPY straddles or things as your alternative to trading a volatility product itself. Yeah, you know, if you go OTC, you can get whatever the hell you want. You know, they'll give you straddles runs all day. They may, I think, it may be a little bit more challenging to have them delta hedge it for you, because then you probably have to have some sort of agreement where you say, here's what I agree the delta is, because that can get sticky. If you think the delta's 20 and they think it's 25 and they hedge a different time than you want them to, that could maybe come back to bite them. So maybe having them delta hedge it for you might be a little bit of might require a little bit more on the VIG to get them to do that. But I'm sure if you pay enough, you can get a house to do anything for you these days. So they will do that. But something that I'm assuming you mean for like an active retail guy, that I've never seen. Mr. Rocklaus, have you ever seen like a packaged, a Delta Hedge straddles for you product, and we'll take whatever percent off the top for our troubles? Have you ever seen anything like that? I'd be scared what the fees would be on a product like that. Let me put it that way.
Oh my God, I know. They would be high, and I mean that's not something you can learn to do. It's not. Well, that's what I spend most of my time teaching, like what I would call our upper end clients to do, so they can just manage that stuff. It's definitely a skill you can learn. I mean, you spent most of your wasted youth managing delta neutral straddles when you were in Intel. So it's a skill that you can learn. Like a lot of options is learnable. So. I mean, there are those, like, I guess there's just those put selling indexes and stuff like that, but nothing that is, nothing I can think of, although we do run our new fund does run an active hedge, which actually is doing what's supposed to do today, which is nice to see. But I have not seen that product, but like you say, I am sure Morgan Stanley or Goldman Sachs would be happy to create some sort of product for you. And it won't cost very much. I'm sure it won't cost any money. But yeah, like 200 basis points.
If you call them the quote that, I would like to know what the quote would be on the spread on that. I'm very curious, because that would be a rich one. I wouldn't delta hedge for someone else unless they were paying me a lot, because you know that's going to end badly, right? Oh, you cut off my upside too soon, or you didn't hedge me aggressively enough on the down. There's no way delta hedging for someone else ends well. No, thank you. You did a great job. So yeah, you probably have to get paid pretty well to do that. Yeah, Mr. Rocklobster, he just said he'll hedge for you. So call him up. He'll do your delta hedges for you. But yeah, delta hedging your own a lot of these straddles is not. You're not talking huge deltas anyway, so it's not that hard of a thing to understand. But if you're not comfortable with it, obviously, maybe paper trade it first, or start small and slow, low and slow, like in SPY, and then maybe with like a one lot, and then work your way up. All right, Telio, maybe he's British. Telio He says, are there any long VIX vehicles that don't erode to zero? Short answer, no. That's a pretty easy one. Longer answer, and you probably got to go the more direct to the fire route to really avoid a lot of that. So you want to trade direct VIX futures. That's probably your best bet to avoid, because anything else that's outside of that, it has all that fun contango and everything else built into it that's going to erode over time. So I don't know. That's probably the best. I mean, that's still going to have issues with it, but it's probably the most outside of what we're talking about, which is doing delta hedge straddles. If you feel comfortable doing that, that might be your best bet too. But those are probably the two best, most direct routes. Would you agree, Mr. Rock Lobster? Either the straight up delta hedge type straddle or the future itself?
Yeah, it's. Are there any long VIX? We can actually. I did that trade today. I created a long gamma, long positive theta position in SPX this morning, right before this crap out took place. So if you know how options work, you can create positions that have positive theta and positive gamma. You got to learn. So is that direct in VIX though? No. You can trade, you can create near flat theta positions in the vol products for periods of time. Again, more education. VIX made easy, VXX made easy, all that stuff. So you actually learn how the products work and how decay works. But you can't do it in a direct vehicle, but you can, if you're slightly clever, do it in the options. There you go.
Mr. Rock Lobster, full of subtle plugs for his services today. I like it. I just did that. I just did that too. I just did all of that.
I've got my pro chat room. Everybody's unwinding their stuff. So it's,
there you go.
That's our proof is in the pudding.
Pay Mr. Rock Lobster an eighth in the 10 lot, and you too can benefit from his largesse in the volatility space. All right, what we got here? We got funky names today. T-Dog wants to know, I don't know what he's talking about here. Is it better to only take the short volatility trades and ignore the long volatility trades? I guess that's a roundabout backwards way of asking, is it better to be short vol than, do you think that's what I don't know what he's asking. I guess that's what he's saying. Is it better to be short vol than long vol? I guess that's what he's assuming. So today, no. Usually, yes. Today, not so much.
Today, bad day.
Today, bad day. Today, bad day to be short the vol. But yeah, in general, you see a lot of people obviously aggressively fading. Obviously, the challenge with that is to have a plan for a day like today. That's what Mr. Rock Lobster does 24/7. So he lives for days like today. He loves to get VIX zone 64. That's his bread and butter. So a lot of people spend a lot of time trying to figure out ways to it's kind of like the opposite of what we see in the S&P, where half the industry spends their time trying to figure out a way to pay for an S&P put, right? In the vol space, it's the other way around. It's try to put your short vol on and then try to figure out a way to do that, to hedge that in a cost-effective manner. It's kind of a similar scenario out here we see in the vol space. So a lot of effort and thought goes into that. A lot of different ways you can talk. You have the VXX underlying. You could have upside vertical. There's a million ways. The future. You could go a lot of different ways to do that. You can have the hedged, aforementioned delta hedge straddles with the VXX downside. A lot of ways you can go if you wanted to do that. But short answer, not so much today. Otherwise, not so bad. I think that's what you're asking. I don't know. It's a bit of a backwards question. Funky question. Griggs. Let's go to this guy first because he's obviously taking numbers. I'm going to skip Griggs for a second. Charlie text. He says, "Why no love for TVIX?" Okay. Everyone who's giving me crap about TVIX, Mr. Rocklaus, that wasn't my fever dream, right? That did exist because everyone's giving me a hard time. Yes, go back. Everyone's thinking I mean February. No, I did not mean February. I know TVIX survived February. I got that. It's one of the last survivors. XIV and others, they imploded in February. That's what I mean. When I mean TVIX imploded, I mean go back a few years. Go into the archive of, I forgot exactly what year. It's like 4 or 5 years ago now, I think. Do a Google search for TVIX a little bit beyond this past February. Go back a few years, and you'll see exactly what I'm talking about. And I mean imploded. It was effectively kind of a decoupling event. Their fund flows got all crazy out of whack, and next thing you know, TVIX was in the toilet. And there was no vol event that drove that. That was just a structural issue with the product. So that's what I mean by, maybe be a little careful when you're diving into TVIX, because if that could happen in a relatively tranquil waters, then, imagine this product you're relying on when everything hits the fan, how that's going to go. Ever since that happened, Mr. Rock Lobster, let's just say I haven't been a huge user of TVIX. Do you still touch TVIX at all?
No, I see people in all these like some of these chat rooms and some of these message board rooms. They touch it. If you want to sling it for like a day trade product or something, it's probably if you're able to margin it and stuff like that. But but for much more than anything like that, I would avoid it because it does weird stuff.
Yeah, you've already seen the craziness happen, and it wasn't really. I'm trying to remember what exactly the circumstances were around it, but it's been a while. But as I recall, there was no big vol event that precipitated that. It was really just a structural issue with the product itself, and to my knowledge, that hasn't been corrected. So just because we haven't seen it happen again.
Yeah, just nobody wanted it. That's what now all of a sudden, because I think people were piling in because of, as I recall, it was the euro falling apart again. So there was just massive speculation in the long vol part. So people kept buying it, but I don't think the administrator, was it Credit Suisse? I can't remember which one it was. They were not creating more units to make up. So the net asset value or the notional value got like way above the net asset value. So I'm not exactly sure how all that works with this fund creation, but there was way more people buying the fund that they were actually buying assets in the fund. And in their prospectus, they said they can stop buying the asset. So all of a sudden, when nothing really happened with vol, and there was that huge premium of people buying the product, they crashed the value crashed.
Yeah,
and that was it. So now nobody wants to really buy it anymore like they used to. So I don't think they've come across the problem again. But
yeah, that's true. And then we still people flocking into it. Does good paper every day, so people have a short memory in the vol space, as I've said many times. This question came in earlier this week. I think we touched on it on Option Block. I think we'll end on this one because it seemed kind of silly at the time. Last couple of sessions, maybe not so much. This comes from 10761, Mr. Rock Lobster. He wants to know, are we in the midst of a major correction? We talked about it a little bit yesterday, so I kind of weighed in on it. What are your thoughts here, Mr. Rock Lobster? Are we in the midst of a major correction?
No, and the reason why I would say that is because vol is moving much more than the SPXs. So I would say no.
There you go. Nice short answer to that question. Yeah, that one came in. It seems silly, but in retrospect, perhaps not as silly as it seemed when it first came in a couple of days ago. All right, I think that's going to do it for the old questions. Now we got to wrap up with, who was it who said it was hard? Alacor, as he admitted it's hard. Yes, we're going to wrap up now with the hardest section of the show. It is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, Mr. Rock Lobster, want to hear what our guesses were for last week?
Lower.
Yeah, I already told you, but Bill was the winner with 13. So that should tell you how close we were. Your buddy, the Meatball, did all the analysis of keeping his bet the same as the week before. He was at 12.15, and I was to the south. I was 11.75. So all of us were, not except for Bill, we're kind of fading or keeping the status quo, and here we are, just in explosive territory. So what I'm saying is I don't deserve to go first this week. So I'll let you go first, Mr. Rocklow. So what are you feeling for this time next week?
This time next week, I'm going to say 13.25.
Interesting. So you're going back down to VIX zone 12, I believe that is.
Top of zone 2. No, bottom of zone 2.
I'm going to keep my fade streak alive here, but I'm going to be a little bit more zealous with not quite as aggressive as I was last week. But I'm also on the camp that this is probably short-lived. Granted, we've seen a couple of sessions now where we've got a little bit of juice to it, but you're right. The indexes are not kind of moving commensurately with what we're seeing in the vol space. So that certainly is a bit of a red flag there. And also, everyone's loving TVIX. That makes me just dubious about the whole thing. All right, so I'm gonna go out here on a limb. I'm gonna go a little bit higher. I'm gonna say 12. I'm gonna lower it. 12.55. I'm gonna keep it where I thought originally. So 12 double for me, 13 quarter for Mr. Rock Lobster. All of you playing along in the home game, send us your thoughts as you guys like to play along too. And no more suggestions of TVIX. We hear you. We know some of you guys like it. We get you. We read you loud and clear, even though we're let's just say we're not users here. on the old show. All right, that's going to do it for this episode of Volatility Views. I got to get going here because they're going to kick me out of the mobile studio soon. So before that happens, I should wrap up the show. But before we go, Mr. Rock Lobster, what is cooking in the land of the pit? And if, I want to take advantage of all these things you're doing when you're doing stuff over there, where should I go? What should I do, sir?
In our store, you can get VIX or VXX made easy. If you want to be on the right side of how vol trades, take the courses. You will save yourself so much money taking those courses. I can't even see straight, but what the heck? It's probably those are our most popular sellers, and it drives a lot of people to option pit in general. So there must be something that we're talking about. We must know something. What else is going on? Look for our next Saturday class, and we are going to do a class on teaching people how to manage and adjust positions. That'll be our next Made Easy series in December. Also, Mark has a webinar coming up, so just go over to optionpit.com, hit the events tab, and see all the stuff that we have going on, or visit our store. There's so much learning in there. It'll make your head explode, which is actually what some of my clients say sometimes. They said my head just exploded.
It'll make your head explode in a good way. The good kind of head explosion, as opposed to
exactly.
All right, optionpit.com. Learn more. While you're there, subscribe to the newsletter. It's interesting stuff. It'll teach you how to do some stuff. Maybe you'll have a section on Delta hedged SPX straddles, Mr. Rocklobster. You never know. People seem to want it. So there you go. Give you a little fodder for next week's newsletter. All right, on behalf of the Rock Lobster and indeed myself, I want to thank all of you out here for downloading, streaming, subscribing, for sending in your love for TVIX and everything else you guys got going on in the brain. We love you. We'll see you back here next week for more Volatility Views.
Volatility Views is brought to you by Cboe. Cboe is one of the world's largest exchange holding companies, and we're inspired every day to innovate some of the industry's most powerful products, technology, and solutions. We're the industry's leading force driving access to global markets. A better trading experience and powerful data and analytics to inform better strategies. We're committed to engineering new ways to help our customers realize their potential and navigate the marketplace of tomorrow, today. Visit Cboe.com. That's CBOE.com to learn more about our expanded offerings.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.